Welcome to Real Estate Wisdom Podcast, episode number 33. Thank you for all your support and you guys reaching out to us and telling us what we're doing great and what we can improve. And audio was one of the issue. I try to fix it, and but we keep on recording and see at the end if it's worked out well. So without further ado, let's dive into the latest trends in real estate market, announcements and forecast in the Canadian housing market. I'm your host, Vishal Kapoor, a realtor from Century 21 Miller. People call me Vish. And we have a packed episode discussing the current state of the market, recent policy changes, and what the future holds for buyers and sellers. So let's get started. First thing first, interest rate and mortgage changes. Our first topic is the recent announcements in mortgage changes and interest rate. We've seen a spike in activity in January, February, and even in March, but we were expecting more in springtime in April. But I think a little bit slow down for a certain reason. And we see when was anticipation of interest rate cuts, we haven't seen the cut. Rates stay stable. And Bank of Canada decided not to increase it or decrease it at this moment. Expectations are that's going to be in June or July. I just attended a RBC Realtor Appreciation event, and we got the great insight from there, what it's coming, why it's happening, what is happening, and why Bank of Canada not decided to cut the rates yet, and may even get delayed. And after that, I heard certain announcements are made why it may happen that rate cuts might not happen at the end of last quarter of this year as well. So that's the current market state. We might see a 2025, 2026. We keep on getting the mixed information from news media, from Ministry of Finance, and Bank of Canada itself. That's what's going to happen. My biggest disappointment the other day was an 18 cents increase in gas prices. So where it will take to inflation. Inflation is not coming down, and we keep on seeing, affordability for housing even is getting worse because now there are some other measures government has taken as well. So Finance Minister Chrystia Freeland recently announced a series of measures aimed at the first-time home buyers and current homeowners. And these include an increased RSP withdrawal, which is the welcome move, which means they increasing the limit from $35,000 to $60,000. So that will give you more tax-free money, which you can put towards as a down payment. And also, they did the enhanced tax-free first home saving account and extended repayment period for RSP withdrawals as well. So I think that will help people, especially for the first-time home buyers, to do more savings. And but at the same time, I will say if you don't have enough money and if your affordability is down, doesn't matter how much money you're paying on RSP or not, but it's going to affect. The other thing which was previously happened is the HST announcement, taking out the HST for the first-time home buyers, because HST was applied to everyone, you investor, I'm talking about the new build, right? And new build, everybody have to pay the HST. Doesn't matter you are first-time home buyers or you are investor. So that was kind of, the patch, I will say, not so effective because we're paying so much taxes. And but these are some welcome announcements now that government has doing something. It's too late. I will say yeah, but at the same time, you have to take an action sometime. It may take effect, and it may take time to make this effective, or the effectiveness of this thing. We're going to see it later. But in my opinion, that's something needed to be done, and I think government working and trying to do it. But it also depends upon the execution, how these policies and procedures are going to be executed. Because municipality have their own challenges, province have their own challenges, and federal government have their own challenges. So we just want to see how effectively this government have make that impact by making those decisions. Interest rates are expected to continue playing a significant role in shaping the market. The Canadian Real Estate Association forecasts that interest rate will be a major factor affecting the market into 2024 and 2025, which is nothing new. We all know about that. With expectancy of rate cuts in the second half of 2024, with June, July, but also RBC Economic also predicts that the Bank of Canada is likely to begin and reducing its overnight interest rate from the current level of the 5% in the later half of 2024, which could simulate the market. Market activity, I'll say home sales are expected to rebound. CREA projects a 10.5% increase in residential property transactions in 2024 compared to 2023, with further growth expected in 2025. The Canada Mortgage and Housing Corporation also predicts that sales activity from 2025 to 2026 will slightly surpass the past 10-year average. So what that means, if you sitting on the sideline, I will say you still have a time to put an offer or purchase a property, because things can change pretty quickly. People have concern about even I cannot afford. Well, there's always an option. If you were looking for a detached house, maybe townhouse is the better option for you because you can afford it. But again, we saying that from long time, and if you hear, it's not just because I'm a realtor, but also looking into investment point of view. Even you do invest in the stock market, when you invest when the prices are low. That's why when you buy the stock, you don't buy on the high side. When you buy when stocks are low. Similar in housing market, you buy when the market is slow. That's the other thing. Right now, there's still not enough inventory. So what the prediction for the home prices? Well, before I go to the prediction, the national average home price is forecast to climb by 4.9% to 710,468 in 2024, and by additional 7% to 760,120 in 2025. And CMSC experts home prices to reach peak levels seen in early 2022 by next year and set new highs by 2026. So it's coming. Regional variations can happen. There will be significant regional variations. For instance, Alberta is expected to see a robust sales growth due to favorable economic conditions and affordability, while British Columbia and Ontario might experience subdued growth due to high home ownership cost. Now, not having enough supply, we keep on saying that for a long time. Housing supply, despite an increase in rental housing supply in 2023, overall supply is not expected to keep up with demand, leading to higher rents and lower vacancy rates. Housing starts are anticipated to decline in 2024 before recovering in 2025 and 2026. Construction challenges. Well, the construction sector faces challenges such as high financing cost and labor shortages, which could impact the pace of new housing developments. And builders are already facing that. Government policies make a big difference in making any changes. And what government is doing, what initiative they're taking, the federal government has announced measures to increase the pace of home construction and improve housing affordability. However, these efforts may not significantly lower home values, but could help manage the pace of price increases. And that's the thing, like the different kind of policies are coming in. Government also announced like certain type of houses need to be made. And they also working on the zoning issues, like allowing for plex to be built more. Municipality have their own challenges. They have to change the zoning by law because, and you can imagine like how many municipalities are there in Canada, and it will take time. So it's not quick fix, but I think they're moving on the right direction. Both the government, even the new government will form next year, which may be like more likely because people are really, really frustrated with this government. But we don't know because until the execution happen, we don't know what's going to happen. So market is still uncertain. Now the new war started happening, Iran attack on Israel, and Israel in counterattacking, and how that is going to impact gas prices going up. And what happens when gas prices go up? When gas prices go up, like everything else get inflated. So I'm not sure how they're going to control the inflation because they cannot increase the interest rate more. And let's see what happens. So overall, the Canadian housing market in 2024-2025 is expected to experience a gradual recovery as interest rate potentially lower. I hope so. Stimulating buyer activity and construction. However, challenges such as affordability and supply constraints will persist, affecting the pace and extent of market growth. Buyers and investors should remain cautious and informed about regional disparities and evolving economic conditions. I hope you enjoy this episode. This was the solo podcast to provide you some market update and what's happening in the market. But if you have any particular topic which you want me to discuss, or you want me to invite a guest to learn about certain topic, please reach out to me or do the comment and let us know how we're doing over here and what we can improve. We'll really appreciate that. Thank you for watching. This is Vishal Kapoor, your friend in real estate, and providing you a real estate wisdom. Thank you for now. Bye for now. This podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.